Hey, Jack, welcome to the call today.
Thank you very much for having me. I'm excited to be here. I'm a big fan of your podcast.
Oh, I appreciate it. That was very kind. So, give us a little introduction to yourself, Jack.
All right, wonderful. Yes. So my name is Jack Bosch. I'm actually originally from Germany, just like we have similar roots here. I'm in the United States for now over 20 years, just 20 years actually this month. It's 20 years, and I came here to finish my college degree. I got a job. I worked in just like everyone else, got a job and so on. And then I started basically, I do real estate now. I transitioned from regular work to real estate. So I've been flipping land. I've bought a whole bunch, I've bought up a portfolio of rental properties. And as of last year, I've gotten also heavily into multifamily, which is probably the reason why I'm here. So since it's a multifamily podcast, so I'm in real estate for now 15 years already, full-time real estate with my wife, with a team, and been very successful. And it's my love. I really love real estate, everything about it.
So you came over from Germany to go to school here, and you presumably got a job. And why did you start getting involved in real estate in the first place?
All right. Well, kind of like if you come, if you get a job here in the U.S., which is pretty normal for all Americans, but like I worked a lot. Had to travel a lot, and the job was a 100% travel job of being constantly at customer sites. And with 2 weeks vacation, soon enough I realized that's really not the life I wanted to live. And on top of it, this company went through kind of like a little bit of a difficult time where they had to let go of several thousand people in a matter of 1 year. And so I see people like popping off left and right. And luckily I did not get fired, but because I would have wreaked havoc because with the visa I was on, I was sponsored visa, one of these H-1B visas, sometimes in the news these days. And if I would have lost my job, I would have had to literally leave the country because nobody else was sponsoring was hiring people on those visas. And so I basically realized that the path to being able to travel the world, the path to being able to stay in contact with my family in Europe, which I'm the only one here in the US from my family, the path to living the life that I want to live was not by being an employee. So I looked around through all kinds of different things. I knew I had to start a business, but real estate appealed to me because, and I saw literally an infomercial at night that said like where people talked about making $10,000, $20,000, and it's like, well, if that's even halfway through, then this sounds really exciting because I only need, I don't know, a deal a month. I only need something. I need some cash flow and so on that I can live a life without a job.
All right, so you said you were too dependent on your employer, certainly
Right.
for the visa. It's not like you can switch jobs like the normal American could. And so that was definitely a problem for you. So you said, "Oh, I got real estate." Now, in the realm of real estate, what did you start doing?
Well, I started in the housing world. I wanted to wholesale a house, but I soon realized no. But I soon realized that in aftermath now, I know that I had mispriced it, misvalued it because I knew nothing about real estate. So I really, the beginning was hard. It took me several years to really figure out my niche, and I didn't end up doing that deal. I would have probably lost my shirt on the deal if I would have bought it and rehabbed it. So I didn't, and soon afterwards I came across tax liens and tax deeds, and then I came across land, and I started flipping land, and that to me at that time, and even today, still I still flip land today, was something that really made sense, particularly from a point of view, actually, and it might sound weird from a point of view of cash flow. I know I listen to almost all of your podcast episodes. It's all about cash flow in this thing, and also appreciation. And but I'm a cash flow guy. So what we ultimately figured out in the land areas is that we could sell these pieces of land with seller financing and get long-lasting passive cash flow. So we built cash flow without houses. Well, it was actually kind of cool and a lot of fun, and we continue to do that. But that's I really I knew that I needed to get rid of my job. I knew I needed to build up cash flow, and through real estate and through selling real estate on seller financing, we made cash flow work for us, which is kind of weird.
Yeah, that is kind of strange. So most people who get started in real estate, they flip a house, they wholesale a house, and then you come up with this land strategy, right? When we say
Right.
flip and cash flow normally aren't in the same sentence. How and you said, well, I started flipping land for cash flow, and I was very intrigued with that. Can you talk a little bit more about the strategy of when you say flip land and cash flow? Like, can you just explain how that works?
Sure, absolutely. So overall, in our family we developed a terminology that is not properly dictionary terminology, but the dictionary we define the real estate transactions by what sort of cash they spit out. So we define deals. They're called. Number one, we define them. The first kind of deal is what we call one-time cash deals. Now, again, you won't find that term in the terminology, but what it basically means is that in the dictionary, what it basically means is that if you do a deal, you flip a house, you flip apartment complex, you flip something, you get paid once, and that's it. So in order to really retire, you have to do either so many deals that you have a gazillion dollars in the bank, or you can't retire. So this option number two is what we call temporary cash, which is basically if you lend somebody money, they pay you interest and then they pay you the money back. Well, that's passive income, but it doesn't last forever. It lasts perhaps for half a year, 6 months, or if you give somebody a hard money loan and so on and so forth. That is more passive, more recurring, but it's not forever. So when we got started, we really just wanted to when I got started with my wife, Michelle, when we got started, we really just wanted to get out of the job. So we started flipping for cash. But then soon enough, we kind of like realized that when we stopped and went on a vacation, the cash stopped.
Right.
So we were like, how can we extend that cash flow? And the way we did it, because we were dealing with land only, the way we did it is by allowing people to pay in monthly payments. So yes, we flipped those properties very quickly, but instead of getting paid out for them, if somebody wants to buy a property for $30,000, that we perhaps, and that's the other benefit of land flipping, is that you can get into these properties very, very cheap. Let's say we gotten this property under contract for $4,000 and we sell it for $30,000. Then perhaps we can ask somebody for a 15% down payment, which is $4,500, $5,000. It's not unreasonable for a $30,000 purchase. So now with that, we got all our money back when we sell the property, and now we get perhaps $300 or $400 a month for the next 8 to 10 years. Now you do that a bunch of times, you got nice, massive cash flow coming in that helps you. But then we also realized after a few years, people started paying off these loans, that if we don't keep that going, after about 6, 8, 10 years, the cash flow starts going down. Now, it's beautiful. You have cash flow for 6, 8, 10 years, and you don't really do anything anymore once you build it up. So it's a wonderful strategy for a beginning investor, but it doesn't still allow you to retire forever, right? And so then we came up with a third concept, which is called forever cash, which is basically nothing but passive, everlasting income. And that's when we got it started into houses and into apartment complexes.
All right, so you started with this land flipping, which is kind of like flipping houses but with land, and you got
Right.
you got good at it, and you're like, I got to figure out how to keep the money flowing. So you did the seller financing thing, which
Right.
is really cool. You see that on the mobile home park, for example, is a great way to generate cash flow,
Right.
and so that worked really well. And they said, well, that's pretty good for 6 to 8 years, but we want forever cash, right?
Right.
And that's when you kind of started thinking about multifamily. Now, tell me about that thought process. You kind of did, hey, so what was that transition like between, and you're still flipping land and you're teaching others how to do the same thing, but you've also
Right.
started getting into multifamily. Can you tell us a little bit more how you did that?
Oh yeah, that thought process. Yes, actually, that's as I thought about it here, the thought process was such that we started in 2002. All the way in 2009, we did not touch a house. We had never touched a house, other than the house we lived in ourselves, right? But other than that, we had not touched a house. Now, I literally, once we realized we need to get into this forever cash thing, we need to get true passive income for forever. We knew that at some point of time we need to get into rental properties in some shape or form, rental apartments, rental properties. Now, rental apartments, apartment complexes was like off the radar for us because we thought like, well, that's too complicated. So what we looked at is we looked at perhaps buying rental houses. Now in 2005, 6, 7, it didn't make sense. Prices were so high, you couldn't make cash flow work. But in 2009, I attended the local real estate investor association meeting. I live in Phoenix, Arizona, and all of a sudden I realized they were giving some statistics that you could buy houses for $40, $50, $60 a square foot. And I was like, whoa. So we started, and that's where we basically couldn't resist. So we took the cash flow from the land and started buying as many houses as we could at that point of time, which is several dozen. And we keep buying right now, but in different markets, just little by little. And then we managed them ourselves, and we rehabbed them with crews and things like that. So we went through all these motions, made a whole bunch of mistakes. Like the Hearst house, we should have probably spent $10,000 on rehabs. We spent 25, right? It's like crazy. We way over improved that property, and we made a whole bunch of mistakes, and we got the wrong tenants in, and all those kind of things that everyone talks about. You are the mistakes that people make. We made, and then ultimately we found a good property management company that we could outsource this to. We tested them. We gave them a few properties first. They did a really good job, and then we gave them our entire portfolio here. And then we started buying in other markets and find good property managers there. And now we're getting a nice cash flow from there. But it's still not 100% hassle-free, because just literally yesterday, I got an email. There was an eviction happened. One of the tenants got out and was evicted, and they left $3,700 worth of damages in that house. So now that wipes out the cash flow for the entire year on that property. So it's very frustrating sometimes to deal with that, because you're dealing with one property at a time. So at the same time, though, by going through that process, we realized that, well, dealing with houses is not as complicated as we thought it is. You can learn it, you can systematize it, and that's something where I think we're very good at, creating systems. And we even have a mastermind for business owners that we help, where we all help each other create better systems and so on. But we started putting in systems in place, and how to manage our property managers, and what KPIs to look at and things like that. And all of a sudden things started working better, and we get more and more cash flow. And at that point of time, we thought, okay, so there's still hassles here. Let's look at multifamily, because I believe if you go into multifamily, and that was the thought process back then, if you buy a big enough building, you can actually buffer yourself double from all these hassles by having a property management company in place, and also having full-time staff people in the property that actually solve all these problems that on the single families right now come to me.
And that's exactly right. And here's the thing: you're still going to have hassles, right?
Right.
But you're right. There tends to be a level of professionalism with multifamily that insulates you from a lot of stuff. So when an eviction does happen, it depends on. I tend to get kind of involved in the property management early on, especially with a new deal or a relationship, and so I want to know exactly what's going on. But after a while, let's say 6-9 months, I start pulling back, and when an eviction happens, I don't really necessarily need to know about it. I just look at my monthly numbers, and if that looks okay, then that's fine. And so with a house, you do get that. It's more difficult to insulate yourself from that. So you were thinking,
Right.
my gosh, why don't I scale this up a little bit? Maybe it'll be a little less hassle to do that. So you kind of transition from a single family house rental strategy to multifamily strategy. So when you decided to do that, what happened after that?
Well, the first thing I always do when I learn something new, now I've done over almost 4,000 land transactions. So I know my land stuff inside out. Now I own several dozen rental properties, and for years now. And so I've seen a lot of stuff there. But I did understand that with multifamily, there's a learning curve included again, because the acquisition process, the sourcing process, the negotiation process, the analysis process, and the management process works slightly different than on single family houses, or quite a bit different. So I did what I always do when we engage in some new activity, and I learned that early on, because it took me 3 years to figure out my land flipping method. I didn't want it to take another 3 years to figure this out, I probably was 80-90% there. I just needed the extra 10-20% of like how this is different than other pieces. So I basically looked for somebody that I could partner up with, somebody I could learn from. So we partnered up with a friend here in town that happened to have just that is in the multifamily area, and he basically allowed us. He says, like, well, if you guys raise half of the money for the deal, we'll go split whatever equity piece we as sponsors get in the deal. So I was basically learning right on the get-go, and we successfully bought a 93-unit apartment deal in Louisiana with that. So it's not in our backyard; it's in Louisiana, and that has been a spectacular experience. Since then, we were gotten very close to buying a few more properties, and so on. But we're not. This was a learning process. Now we sometimes do deals together still with our partners sometimes, but we're all independent of each other, doing our own deals. So I basically learn from an expert. Just like I mean, if you're listening, anyone listening here, I mean, I know, understand you do that same too. You offer that even. That's a great strategy to get into a deal and learn the ins and outs of the deal.
Well, you mentioned partnering, and partnering is a very common theme with people I interview, people who got started, people who are successful, and they partner for a variety of different reasons. They partner either because they don't have the money, and so they're partnering with someone who has the money, and they're hustling and finding a deal, which is hard enough to do. Then there's others who actually have the money and they want to get the experience. So instead of investing passively in a deal, they will do what you did, and they want to invest. I don't know, pactive, passive active. They want to get into a deal. They may not find the deal. They may not be the lead on a deal, but they don't want to just be passive. They will invest with an active syndicator, but they want to learn the business. And so you guys kind of worked out a joint venture partnership where you weren't just a passive investor, but you were actually much more hands-on so that you could do it yourself, right?
Right, exactly. And we went through all the details from the acquisition process, the analysis process, the management process, the of being on the ground, being all the things. So it was like an MBA and multifamily. And as I said, I mean, in my particular case, I want to say I know a fair amount about real estate already. So it was like, for me, it was about bridging that 10-20% gap that was missing. Like, how is this different? What KPIs are you looking at? How do you do certain kind of things? And it was very enlightening, very incredible what you learn in the process. Like, for example, the distinction between overall occupancy and economic occupancy, which you don't really hear in another framework out there. So now we're out there. We're building our team. We're building additional funding sources, and we have pretty big goals in the apartment space over the next 5 years.
And are you going to work? You said you going to work exclusively with this partner, or are you going to do more with this partner, or are you really looking to kind of build out your own portfolio?
I'm looking to build out my own portfolio. We are still very good friends with this partner, and we're probably partnering with each other on like larger deals. Like if there's a $20-30 million deal that comes along, we might join forces to get that deal done and so on. If it's a smaller deal, we each have the ability to do this ourselves, because what we do is we syndicate the deal. So we go look for investors that want to be part of the deal. They get a very nice return. They get obviously a good piece of the upside, and so on and so forth. And that's a very scalable model. It's a very interesting model. So what we are independent of each other. We're building up the deal flows, and we're building up our investor bases more than we already have. And it's but yeah, we're definitely probably going to do a couple more deals together. Not everyone, but as it makes sense.
Yeah, that sounds good. Now you mentioned syndication. Had you raised money before, or was this kind of a new foray into raising money?
No, I'd never raised money before. I literally, I mean, because with those land deals, I mean, I got my first land deal for $400 and sold it for $4,000. And then the next one I got for $500, sold it for $9,500. So I built up really from zero cash while having a job. And then, so I was blessed to actually never had to ask to raise money, but also over the years, I had the benefit of having built up a really good reputation in the market. So there's a lot of people that know that trust us and so on. So it wasn't all that. The good thing is it was nerve-wracking, let's put it that way, to go out there and ask for money for the first time. But at the same time, the results were very positive, because if you have a good reputation in your life, if you're somebody that people trust, then they're going to listen to you, and that's what happened. Not everyone we talked to invested, but we were able to. And for this deal, we needed to raise $1.4 million, and we were able to raise that in a very short time, and that was so I was actually very positively surprised of really how not simple, but how quickly it went and how positive the reception was.
What was nerve-wracking? Or you said it was nerve-wracking. So obviously there was maybe some kind of limiting belief in your mind when you said, "Oh my gosh, I have to raise $1.4 million." What was that you were anxious about, or what was stressful about that thought?
Well, my number one thing in life is that I follow Warren Buffett's rule. Rule number one, never lose money. Rule number two, don't forget rule number one, right? So I am very conservative. So we, for example, in our deal, what we did is we didn't take, instead of taking a 5-year loan like most people do, we took a 20-year loan with a 7-year defeasance clause, prepayment penalty. But after 4 years, it's already 1%. So we put some things in place. I'm very conservative on there. So in the past, I felt very comfortable doing deals with my own money because, hey, if I lose money, it's my money, right? So, and then I'm not putting anyone else in harm's way. So before I went out and asked for anyone's money, I needed to check off all the check boxes and make sure that their money is safe, right? So the most nerve-wracking thing was really my thing that's like, okay, now I'm responsible and I'm the steward for somebody else's money. And that's a mind shift that I needed to do first. And once I'd done this mind shift, it helped that this deal was phenomenal. That was a great deal, and that only deal, those are the kind of deals we're looking at. But it was the mind shift was that now instead of just going after using my own money, I'm now steward of somebody else's money, which puts a whole bunch more responsibility on my shoulders. So I needed to think through all the different pieces first to make sure that there's really almost no chance that anyone ever is going to lose their money. And we put in all kinds of security measures in there to make sure our investors are safe.
Yeah, that's right. So your biggest concern was basically losing friends and family money, right?
Right.
Which is real, but yeah. No. So what is your conclusion about multifamily, right? So you're now a steward of other people's money, and compared to other investments you've seen, I mean, where does multifamily rank in the risk reward spectrum?
Oh, I love it. It's risen up to almost the very top of my favorite investment methods, along with the land, obviously. But because if you get, there's certain keys to multifamily, in my opinion, and the number one key is management. Obviously, the number one key is the quality of the deal in the first place. If it's a crappy deal, excuse my language, but if it's a bad deal to come in, you don't want to deal with that property in the first place. So if it's a property that's already running perfectly, there's no more upside. Well, I don't want to buy that property because there's no point in that. But if it fills our criteria, management is the number one thing. And if you have a good property management company and it's run well, it's like as hands off as I've ever seen anything ever. It is beautiful. It's cash flow, like that deal that we bought, 93 units. Within 6 months, we almost doubled the net operating income on that property.
Amazing.
With that, the value of the property is obviously almost doubled, which means now, even though we took an 80% off purchase price loan, this loan to value ratio, because the value has doubled, is now at 40-50%. So this is an extremely safe investment for investors right now, because if we would sell this thing today, we could get almost twice as much for it, but the loan is still the same. So it's on every aspect of it. It is a super low risk, high rewards business. Our investors making double digits. We're making cash flow. I love every part of it. The key is proper property management.
Yeah, clearly property management is the absolute key. I'm also fascinated by how multifamily performed in a recession. So obviously the default rate with houses was very high, but with multifamily it was like 0.4%, and that includes both California and Florida in there. So without them, it's like 0.01%. The default rate was very, very low in the recession.
Right.
And the reason that people got themselves in trouble is because they bought stuff. Number one, they overpaid, and then they get 5-year ARMs that they had to refinance or sell right during the recession. And those are the very few then that defaulted. But the default rate of multifamily was extraordinarily low. So
Right.
Another reason I like that. Now, obviously, you went through, you just started with land, but then there was a period of time when you did a lot of single family houses. Looking back on that, would you have started with multifamily sooner, or was there something compelling that would have delayed that?
No, probably is my number one regret is that in 2009 I didn't start with multifamily. Instead, I started with houses because I think the cash flow in our life would have been multifold higher by now than it is because I started. But then again, on the other hand, probably it was necessary to go that path for us because even though we had done 30 something hundred or 3,000 deals or something like that by that time, we still didn't have much experience in construction in actual buildings. So it was a very good learning experience to go through those rehabs and go through the tenant experiences and go through all the kind of stories I'll tell my grandchildren one day about midnight move outs and things like that. So So in aftermath, yes. Do I wish I would have started in multifamily earlier? Yes, absolutely. But I think overall, it all happened the way it happened for a reason, and it's all good.
Yeah, it all does. It always happens for a reason. I think for myself, I don't know about you. I mean, I always thought about apartment buildings in my mind as I was happily flipping my houses, but I always thought it was an advanced strategy that I would graduate to some way. And now looking back on it, it actually wasn't true at all, right? I don't know how you felt about that, but could you have gone right to multifamily if you decided you want to do that, or what do you think in your mind was holding you back from doing that at the time?
With proper guidance, probably yes.
Right.
With proper guidance, probably yes, because we're pretty go-getter people. We know we can accomplish certain things and so on. We set our goal to it, but probably back then, I mean, I when I really look back to 2002, I my mindset was completely different than it's today. I was much more in the like in the employee mindset. I was much more in like just thinking small and so on. And then my own success helped me grow my thinking, right? And even going into multifamily, we realized like let's step this up. We need to grow. We need to do something more. And now not just buy one. We have goals to buy 5,000 apartments in the next 5 years. So probably only perhaps in the next year might only be one or two more deals because we're also doing a lot of travel this year. But then we're using that to the time to also put all the real good systems in place to make this big scalable. So our mind has expanded to 5,000 units versus initially I was scared about doing my first land deal. So if somebody would have come to me in 2002 with an apartment deal, I probably would have run the other way, but not because I'm not capable of doing it, but because I had zero knowledge and I didn't think I could
Yeah.
do it. You know, now with what I know, with proper guidance and knowing it all comes down to knowledge, right? It all comes down to knowledge. If you know the language of multifamily, if you know the criteria to select a deal, what makes a good deal versus a bad deal, if you know what you can accomplish in multifamily, then it's actually simpler than single families,
Those are big words,
right?
and I agree with you. It's difficult to believe that for most people sit at the RIA meeting every single month. What you just said, it is so true, and it does imply a mind shift. I found that if I can help someone visualize how to do something, for example, overcoming lack of experience with a few simple techniques, overcoming lack of funds with a few simple techniques. If I can show someone like that, they kind of this light bulb goes off, and they realize all of a sudden, oh my gosh, it actually is possible. Now, I may not know all the details, but for the first time, I'm like, I think this is actually possible. And that's kind of what I'm on a mission
Right.
for, is because, like you said, multifamily actually is, frankly, easier. It's forever cash, which was house flipping is not. But most people dismiss the strategy because of the reasons that you just mentioned, which is I don't have enough experience or enough knowledge, or I don't have enough cash.
Well, I don't have
Yeah,
cash,
exactly. Yeah, yeah.
right?
And now you know how to overcome those things, and that makes multifamily so powerful. So
Yeah, I 100% agree. Yes, I mean it's beautiful, and as I said, you do have to look at certain things, and you have to grow a little bit to do this. But you can grow with by watching it, by going through the motions with things, by practicing analysis. Now, since that deal, we have been chasing more deals. I mean, I've gotten really good at analyzing deals now, right? And because now the first time I looked at a spreadsheet and I was like, I didn't know what these numbers meant. Because on a house, you don't need that many spreadsheets, right? You can put it on a paper or a napkin. And on a multifamily, you're looking at a more complex spreadsheet. But by now, having analyzed 20, 30 deals by now or more, it's like, okay, it's not that big of a deal. And it makes you just much more comfortable. It's like everything. You got to practice it.
yeah, yeah, that's awesome. So what's your advice to someone who was in your shoes? You know, they maybe have done a few single family houses or are thinking about single family house. And there's something gnawing at them going, it just seems like too much work. I can't quit my job fast enough. And what's your, and maybe they're thinking multifamily, but they excuse it kind of like, like a lot of us do, as a viable strategy for them. What's your advice to those kind of people?
Well, get help. I mean, get assistance. Go shadow somebody. Get a coach. Get a mentor that has done it before. I mean, a mentorship is really what it in essence is. It's a time compressor, right? You can figure anything out in life yourself, But if you don't have any, but it might take you 10, 20 years, right? I mean, why do kids have math classes in school, right? It's basically they have math classes because their teacher is their mentor. Math has been figured out before. They don't have to figure out the math problems of this world. They need somebody who teach them how that works. It's the same thing in languages and everything. We are using tutors and mentors all our lives. We just call them teachers and call it high school, right? But outside of that, it's the same thing. People trying to figure this out themselves and trying to raise the money themselves or trying to earn the money themselves. And it might take you years and years and years to raise $1.4 million by whichever profession you have to then get the deal. But you can put 15, 14 people together at $100,000 each, or 28 people at $50,000 each, and you got the money raised, and you get a piece of the deal, and everyone makes a good income on there. So get a mentor, get somebody that can get you to those mental hurdles and tell you what to look at in those deals, because that's the thing that, for example, I didn't know. I know how to look at an apartment. I know how to repair, how much it costs now to repair anything around any kind of improved properties, a kitchen, bathroom, things like that. How much carpet, how much tile should cost. But what numbers do I look at in an apartment complex is something I had to learn first.
Yeah, yeah, that makes a lot of sense. What are you excited about right now, Jack?
Well, I'm excited about in our own personal life what we're doing right now. We obviously we are focused on cash flow, and we have built up cash flow through multiple avenues. So this year, this next half a year right now, we are actually doing a lot of travel. We just came back from 3 weeks in Europe, including our both Germany, where we both have some roots on. We are we're going another 2.5 months of travel for the rest of the year. We're going to China well, actually to Asia, Tokyo, China, Beijing, Hong Kong, Bali for pretty much all the month of October. I'm going back to Germany 2 more times this year. We're going to, or with a family, one of them. We're going to South America. We're doing things like that, and all the same time, we can run or continue running our businesses because the way we've structured them. So I'm excited about that. I'm excited about 5,000 deals in 5 years. I'm excited about building this up and the cash flow that comes from that, and the lives of the investors that will be transformed by it. Because there's so many people who have money in the bank at 1 or 2% or so, or even the stock market at whatever it is, and they don't even know that, or in their self-directed IRA, they don't even know that they can make 10, 12, 16% a year on average with some multifamily deals that are really, really safe. So I'm excited about that growth. I'm putting a lot of effort into that, and I'm excited about life in general. I mean, it's a beautiful time right now. We even took our daughter out of school for her to travel with us. We're homeschooling her right now, and it's just like it's a special time right now.
That's fantastic. It's great. Yeah, enjoy it. It's fantastic. You guys, you've earned it. If people want to get a hold of you, Jack, how do they find you?
Well, I'm on Facebook under Jack Bosch. They can find me there. Depending on what they want to know, if they want to know more about the apartment complexes, they can go to jackbosch.com/apartments. Again, jackbosch.com/apartments. There's a little information about that. We're still laying out all the foundation and things like that. Right now, we're able to probably do 2, 3 deals a year or so on with just our investor basis. And if they want to know about the land flipping thing, they can go to again, what is it? jackbosch.com/land, and learn more about that, and so on.
That's awesome. Thank you so much, Jack, for sharing part of your story here today.
You're welcome. Thank you for having me.